The big story for Nigeria is around the MPR today, leaving all the parameters unchanged. The central bank maintained its dovish monetary policy stance at the end of its two-day meeting, holding all rates while outlining key considerations around its various interventions. Take a listen to the central bank chief, Godwin Emefiele, speaking to the manufacturing sector growth in the latest first quarter GDP report.
We will try as much as possible to be pro-growth so as to continue to see what can be done to accelerate output, but at the same time we are going to keep our eye on whatever can be done to rein in inflation. And in doing this, what did we say? Monetary policy came up at that meeting, last meeting, and said, the penultimate meeting we said we are going to adopt a systematic synchronization of monetary policy variables, right, that will help to rein in inflation but at the same time boost output. At the last meeting, we also said we will go ahead to look monetary policy, encourage the management to say that we should adopt some form of administrative measures to mop up liquidity or to control money supply in the system, and in the process rein in inflation by reducing the money supply. That would help to control inflation, while at the same time, because what you will find is when you rein in inflation by mopping liquidity is that it becomes constraining. But at the same time, on the output side, what should we be doing? Let us use our development finance tools to boost output by ensuring that liquidity and funding is made available at concessionary rates to employment generating and output stimulating sectors of the economy. So you are looking at how do you titrate these variables in a way that you are able to rein in inflation, but at the same time you also grow output. So that's what we have done. And that is the reason we're saying it's not a surprise to us, but those who do not understand it will say, oh, how is this happening? I'd heard a couple of people, some say, oh, they expected the output to be negative. I had heard some comments by somebody from LCCI, Lagos Chamber of Commerce, saying, oh, what is happening? That manufacturing has not seen enough impetus to begin to say that, that the output growth should be positive. But let me give you some numbers. Like I read at the communique. When the pandemic struck effectively, we said all CBN intervention facilities will now go at 5%. And what we did is also expand that in 2021 into March 2022. We asked banks to restructure some of the facilities of companies and businesses that may not be able, that have been impacted adversely by the pandemic. We provided stimulus by saying that we're putting in place. At that time, we initially started 100 billion for targeted first credit facility, increased it to 150 billion. At the last meeting, it was increased to 300 billion because we saw the positive effect this was having on consumption expenditure, right? We also went forward to say that for the health sector, we'll make available stimulus of about 100 billion for some of our pharmaceutical industries that have gone moribund to come back alive, or even expand some of the plans of the existing ones. Or our hospitals, to see what can be done to retool our hospitals so they can provide health facilities. These are all stimulus that are meant to stimulate consumption expenditures and also investments. Don't forget the formula for GDP, consumption and investment. If we inject liquidity in that direction, normally what will happen on the result side is that output will grow. Okay, we understand government constraints, but at the same time, we're doing everything as well to see what can we do to ensure that goods that can be produced in the country are produced so as to constrain imports and make it difficult for people who want to source forex to bring those things. So those are the things that will naturally result in this. So it is science. For us, it is science to expect that what happened or what is happening now is happening or has happened. On the manufacturing and agri sector, where Lagos Chamber of Commerce, Amuda was talking about, we made available 1 trillion naira. Out of the 1 trillion naira, we've disbursed so far 856 billion naira to 77 light manufacturing, 36 in agro-based industries, and 30 in services, and 11 in mining. These are targeted interventions to support, like we said, employment, stimulating and output generating sectors of the economy at intervention rate of 5%, because these were funds that came in through the CBN DCRR facility. So it's not surprising that we're seeing what we're seeing now. So, but what monetary policy decided we should be doing today is to say, hey, how should we proceed? What are those indicators that led to us having this kind of results? And that is why monetary policy said, hey, let's hold, look at those items, inflation, continue administrative measures. On the output side, continue to use your interventions and subsidized interest rates to those agriculture, to manufacturing, to the targeted credit facilities, to make sure that we're able to stimulate consumption and investment that will ultimately yield a positive result in growth for the economy.
Okay, so let's kick off these two-part post-MPC conversation now with Tosin Osunkoya, co-managing partner at Comercio Partners, a licensed investment securities firm based here in Lagos. Good evening to you, Tosin. Thanks for coming through. You're listening to the central bank governor there. What are your thoughts around Nigeria's decision, soft inflation, by the way, for April, gentle GDP recovery in first quarter that we saw? Why are all of this put together into the MPC decisions that we saw today?
All right. Good evening, boss, and thanks for having me. I think it's an interesting time right now in Nigeria, obviously because of the data coming out of, the inflation figure and, of course, the GDP. But I don't think that we're out of the woods yet. For the inflation figure, obviously, there's been some moderation. The last time we experienced any form of decline in inflation rate, that's the headline inflation, was in 2019, August precisely. That's about 20 months from now. So yeah, people are excited that inflation is moderating. But again, we need to be aware of the fact that it's as a result of the base effect. What do I mean by the base effect? The base effect is largely the figure that were printed the previous year. So 2020, we experienced, hike in inflation rate, obviously because of the pandemic. I think the major hike was in April 2020. So that has started kicking in, and we're going to experience that for the rest of the year. For the GDP, I think that, yes, we are beginning to see marginal growth in GDP. The growth was about 0.5 compared to 0.11 the previous quarter. But it comes with a mixed bag in the sense that the oil sector, which is the largest contributor in terms of contribution to the GDP, or that drives the growth in GDP, has really not been out of the contractionary region, but it has improved. So obviously, if you look at the last print, which was about 20% compared to what it is right now, which is about 2% contraction, you could see some sort of improvement. However, what worries me is the non-oil sector. The non-oil sector hasn't really shown improvement. So the non-oil sector was 1.6% growth compared to 0.79 drop from 1.69 to 0.79. So that worries me. So if you look at all this breakdown, you begin to understand that we are not out of the woods yet.
So in a manner of speaking, why are these two economic data very important for the monetary policy decision taken today?
Well, they're very important because those two variables are largely the driving factors, all right, in any monetary or economic growth of any country. And obviously, the central bank, amongst other primary mandates, is the fact that they need to ensure price stability. And if you're talking about price stability, you look at your inflation rate. So inflation rate plays a major factor in that. The same way the growth in GDP plays a significant impact in your price stability.
All right. When we talk about the exchange rate, which is a very key part of the metrics that investors and markets want to know, where is that headed? What's your view? The central bank didn't speak so much about that. A little bit of that in the Q&A, by the way. But then what's the outlook from the market side?
The outlook, you mean for the rest of the year?
Yeah, in terms of where we are right now on exchange rate.
Well, I'm happy that the central bank has moved, the interbank rate, the official rate, and aligns it with the NAFEX, okay? I mean, I see that that's a measure, as a positive measure in the direction of what the entire market has been clamoring for unification of the exchange rate. Obviously, Boston, you would agree with me that you have multiple exchange rates regime, and that doesn't really bode well for the country. This is one bane that has, discouraged the foreign investors from coming into this country. So, in my view, I think that has to be done going forward. I think that the central bank also would need to instill a lot of confidence before we begin to see some sort of supply, from the foreign investors coming into Nigeria.
Okay, let's take a quick break. Tosin Osunkoya from Commercial Partners will be right back. The central bank has sealed any expectation of interest rates tinkering until perhaps any time in the second half of the year, as it holds all previous parameters today. So where does that leave the markets? My guest, Tosin Osunkoya, is standing by to take the MPC decisions to market state. Tosin, thank you so much. We're talking about exchange rates a little bit earlier. So do you agree that the whole decision today was the best at this point in time?
I completely agree it was the best. I think a lot of analysts in the market expected that they were going to hold all those rates because I don't think that CBN would like to rock the boat. I think they are less inclined to do that. Obviously, with the positive data coming out of Nigeria, they would like to see the impact of these going into the rest of the year. So for me, I believe that coming, to subsequent quarters, obviously, we need to be careful of the data coming out of inflation, coming out of GDP as well. I think those two will play a major role in the next or at the next MPC.
But what are the chief concerns of investors right now? We touch on exchange rate as we move towards mid-year. What are they looking to see from the government on the macro side? Let's start from there.
On the macro side, before any investor can come into any country, Boasin, you need to understand that they need to have some level of comfort and confidence in the economy, all right, at the macro level. What that means is that you must have a consistent policy in place. You cannot continue to experience policy somersault and expect that foreign investors will come into the market. They will not. They will shy away from that market. So first off, I think it's important for us to have a sound, robust policy in place around, the FX situation. And I think, again, we need to allow for free floats of the FX. If you look at, what has happened in other climes, especially in Egypt, they went through the same problem. And at some point, they decided as a country to allow for a free float. And that has really helped in terms of foreign investors going into that country. So I think it's the same thing we need to do here. I think we need to look at, more importantly, the unification of the FX regime. It is very critical at this instance. I think not until all of that is done, and again, we need to curb the insecurity situation in the country. Obviously, it's heightened at this moment, and people are beginning to be apprehensive about how that impacts on their investment.
Are investors, local and foreign, making a call on insecurity right now? To those of you who are dealers and operators in the market, what are you hearing on the ground about their concerns? How deep is it?
I mean, their concerns are a lot more worrisome and worsened right now, obviously, because they wouldn't want a situation where their investments are impacted by this the security situation. So all we can say to them is to continue to manage the expectation that the government are, handling the situation. I think it's a phase. I think it's something that would go. Obviously, we don't know when, but again, it depends largely on the machineries that the federal government will put in place to address all of this. But clearly, the foreign investors are concerned about the security situation.
Yeah, but give me a list of what investors and the business sector would like to focus on moving forward aside insecurity. Again, we'll look at what the central bank governor said earlier, which you play at the beginning of the program, about the interventions in the manufacturing sector. Do you think this is good news enough to push us at least some steps forward?
Yeah, I mean, I'm happy with what the central bank has done to date with regards to the stimulus packages and interventions, at various levels. I think that has contributed, to the growth in GDP and basically to spur economic activities. All right, credit is very important in any economy. If you make debt available, you make funds available to the real sector, you would see some level of demand. What really determines the GDP growth, in my view, is the economic activities, and that likely depends on the demand and supply mechanism. However, having said that, I think central bank would need to have a wider spread of that. I still have a feeling that some corners are not enjoying these interventions. Going into the rest of the year, I would like to see, at Commercial Partners, we'd like to see a sustained growth in GDP. The IMF, they are looking at 2.5 projection for this year. I believe that, with what has happened in the oil sector, if Nigeria can begin to taper down on the OPEC cuts in production, that could take us out of the contractionary region and move us into a green region. And again, I'm hopeful that the non-oil sector too, barring disruption in services, we'll begin to see some improvements in that sector. So, Bosin, I'm positive going forward into the rest of the year. I think the GDP would continue to grow, maybe to 1% to 2%, but I think we're going to touch 1% at the next, count. Outside of that, I think the central bank also are beginning to listen to calls on unification of the FX and also allow for FX liquidity. FX liquidity is very important. I mean, we've seen this, played out in the past where there's some sort of restriction or you don't have aggressive supply of FX. When that happens, it wanes down or discourages, foreign investors from coming into your market.
We really appreciate your time on the show tonight. Tosin Osunkoya, co-managing partners.
Thank you, Bosin.
At Comercio Partners. Thank you so much. Have a great evening.